My name is Chetan Potdar, and I am a full-time professional trader. I'm a full-time professional investor, and I've been doing so for last 8 years. I'm also a teacher of the stock markets. I've been doing so for a little more than 8 years across multiple countries around the world and across multiple institutes around India. So, but very quickly today, I'm going to talk about how market participants behave in the stock market, why they lose money, and what is that they could do in order to not lose money is what I want to explain. So it is said that 95% of the people in the stock market always lose money. Yeah. We also call these people as retail people, and we also call these people as VIPs. Now, the reason why we call these people as VIPs is because these are the ones who are always donating money. But while 95% people are always losing money, there is this 5% people who always make money, and we call these people as professionals. Yeah. And whenever these 95% people lose money, this money ends up coming to this 5% people. So very quickly, I am going to talk about very small reasons why these 95% people lose money and why these 5% people always make money. So without going into details, let me quickly name you the reasons why these 95% people lose money. And the number one reason why they lose money is because they take tips from other people. Yeah. So somebody whom they don't know about, somebody who they have never met in their life, somebody who is a complete stranger to them, comes down and gives them tips with the intention that they will make money. Now, why would that happen? For people who are receiving to make money, or for people who are giving tips to make money? Just think of it. If somebody is giving you a tip, yeah, don't you think he would rather take his own tips and make money out of it? Why would he give it to you so that you can make money? It just does not make sense. Yeah. The second reason why these 95% people lose money is because they listen to TV. Yeah. They follow a lot of people on TV. Now, all the people who come on TV and they give out tips, they are really there in order to promote themselves. They are there in order to increase their business. It's a PR exercise, and the objective is that they come on TV so that they get more audience, so that they get more business. So this is the second reason why a lot of people in the stock market lose money. Third reason why people lose money is because they listen to newspapers. Yeah, so they read news. If there's a good news, then they buy the stock, and if there's a bad news, then they sell the stock, and then they lose money. Now, why does that happen? The reason why it happens is because when there is a good news, you have to understand that it takes exactly about 5 minutes for the stock to go up by 20% if the news is good, and it takes exactly 2 minutes for the stock to go down by about 10% if the news is bad, which means by the time you're going to listen to it in the newspaper tomorrow morning, which is after about 18 hours, you are going to be the last person to hear that news. So the objective of that news is really not met. The fourth reason why most of these people lose money is because they listen to their brokers and they take advice from their brokers. Now, what you have to understand is, who is a broker? A broker is a person whose objective is to keep on making you trade and increase your transactions so that he gets his brokerage and he becomes rich. He is not really interested in making you rich. Please understand this. The objective of broker is to make himself rich because it's a business for him. Yeah. Each person who is a broker in the market always has a target which he has to attend to at the end of this month, because if he does not meet his target, then he is going to lose his job. So please make sure that you, whatever advice which your broker gives you, you take it with a pinch of salt. Also, if your broker was such an excellent guy in the stock market, why do you think he would run behind you to give you tips so that you become rich? Wouldn't he be rather investing his time to make himself rich? Just think about it. And the fifth reason why these 95% people always lose money is because they listen to their friends. Now, I'm not saying that you should not trust your friends. I'm not saying that your friends are not trustworthy. I'm not saying that you can't depend on your friends. All I'm simply saying is that your friends also do not know this business, and because they do not know this business, whatever advice they're going to give you might not be the right advice. Yeah. And so this is what 95% of the people do in the stock market. They listen to tips, they listen to TV, they listen to news, they listen to brokers, and they listen to friends, and hence they lose money. In fact, surprisingly, While I was talking about 95%, the moment you come into an FNO segment, it is said that 98% of the people by volume always lose money. So if you are doing an FNO, it is not how soon you're going to lose money, but how much money you're going to lose out of the portfolio that you have, because it is confirmed that you're going to lose money. In fact, the similar situation is also with intraday. So 98% of the people who are into the stock market, who are doing intraday, always lose money. And the reason that happens is because intraday is something which requires extremely high skill. For you to be doing an intraday play, you need to have formal education in trading. You need to be sitting down and doing your homework and pre-market and post-market and understanding how stock market works, and you have to be a full-time trader for minimum of 12 hours for you to be making serious amount of money into intraday. And if you are one of those people who have not learned this officially, or who have not learned this as education, or who does not have more than 2 or 3 hours, which means you are working for somebody else in your life, then intraday is simply not for you. Just take it from me. Yeah. So while 95% people always, 95 to 98% people always lose money, there's this 5% people who always make money. Now let's very quickly understand what is the story behind this this 5% people who are always make money. Yeah. The reason why these 5% people always make money is, first of all, they are into the stock market all the time. They are professionals, which means they really don't do anything except for investing and trading into the stock market. These 5% people are the ones who are educated. They have gone through the entire formal education for 2, 3 or 4 or 5 years. They are continuously upgrading their knowledge and skills. This 95%, this 5% people always make money is because they treat the stock market like a business. Yeah. Please understand what is the meaning of stock market. So let me just quickly write this down. Stock market. Yeah. It basically has two words. One is the word stock and second is the word market. And whenever there is any sort of market in the world, then what really happens in the market is business. And as far as stock market is concerned, it is a business of buying and selling stocks. So it is a business of buying and selling stocks. And these are the 5% of the professionals are the ones who approach this as a business. And every business in the world has certain principles in life, and these principles in life are systems and processes and strategies and rules and regulations and methods and information and knowledge and skills and strategies. Businesses can fail, but systems don't fail, processes don't fail, strategies don't fail. So let me write this down for you so that you guys can focus on this. Yeah. Systems, processes, strategies. Every business can become very successful if there are the right strategies, there are right tactics, there are systems, there are processes, there are skills. So if you are putting money into the stock market and if you do not have clear systems and processes and strategies and tactics and skills in the stock market, then believe me, you are a part of somebody else's strategy. Yeah. So 95% people always lose money because these are the ones, 95% people who are always listening to all these things. But while 95% people are busy losing money, there is this 5% people who are always making money, and the reason why they always make money is because of all these reasons. Yeah. So very quickly now I'm going to explain to you how does this 95% people lose money. And the best part is, even when these 95% people are losing money, they convince themselves that they are making money. Now it's a beautiful mind game which their mind plays on them, and I'm going to explain to you how it works. So these 95% people, retailers, come into the stock market. Now these 95% people, let me just make a caveat to you. These 95% people are extremely smart people, and they are extremely educated people, and they are extremely knowledgeable people, and they are extremely successful people in life, and they're extremely rich people in life, and they are very articulate people in life, and these are the people who are very well aware in life, and they're very well read in life, and they always come to the stock market. And the worst part is, even after having all these things going in for them, they always lose money. And the reason why they lose money is because while they might be extremely smart and educated and knowledgeable, they are extremely smart and knowledgeable in their own field. They are not knowledgeable in the field of the stock market. To give you an example, let's say for example, let's talk about a person like Sachin Tendulkar. We consider him to be god of cricket, and he has been batting for last 25 years of his life, correct or not? And there is nobody who could be really batting better than him. But does he know how to play golf today? Now, why does he not know how to play golf? With 25 years of skills and 25 years of experience and 25 years of holding the bat and hitting the ball every day, it should be very easy for him to play golf, and he would probably make more money in the next 5 years by playing golf than he has made in his entire cricketing career. Why? Because golf is the richest game in the world, and he does not do that. And the reason why he does not do that, because even he, Sachin, knows that he might be god of cricket, but this is golf, and today he does not know how to play golf. And the emphasis is on the word today. Today he does not know how to play golf, which also means that tomorrow he may be able to learn it. Yeah. So when somebody says that today I do not know how to play one particular game, which means there is an openness that tomorrow he might be able to play that game and make money out of it. Now, so what is the solution then? So what is the solution? Yeah, is to learn it. Now, very quickly, let me just move forward and explain to you how this is 95% people lose money, and while they lose money, they keep on convincing themselves that they are making. So this is exactly what happens in the stock market. This 95% people come to the stock market, and when they do their research, now they do some sort of research which nobody knows about. They do some sort of research, and after they do the research, they realize that they want to buy the stock at 100 rupees. And the moment they want to buy the stock at 100 rupees, what really happens? Very simple. Immediately the stock goes to 110 rupees, and the moment the stock goes to 110 rupees, these people, because now they have made very quick amount of money in very quick amount of time, they immediately sell the stock, and this is their profit, correct or not? But we all know for a fact that and the moment they make quick money of 10%, they think that they are all Warren Buffets of the world, right? But we all know that this happens very rarely. What really happens is, the moment they buy the stock at 100 rupees, it immediately starts going down, and it goes down, and it goes down, and it goes down, and it goes to 30 rupees. Now, if it goes to 30 rupees, what do these guys say? This 95% people, what is this 95% people saying? If it goes from 100 to 110, they call themselves Warren Buffets. But if it 100 goes to 30 rupees, they immediately tell themselves that really, I was not a trader at all. I am a long-term investor. So if they buy the stock at 100 and it goes to 110, they quickly sell it off, and they call themselves rockstar traders. But if 100 goes to 30 rupees, then they tell themselves that they are long-term investors, and long-term investors always hold stock for a long period of time, correct? If this direction is called as profits, what is this direction called? And this direction is called as loss. But the moment we tell them that this is actually a loss, these guys get very upset. And what do they say? They say, have I sold it? I haven't sold it. I'm going to hold it till the time I get all my money back. Yeah, it does not matter if I take 10 years, because now I'm a long-term investor. So I don't mind holding it for 10 years, but I'm not going to sell the stock at a loss. Now, what if these guys, which are long-term investors, were a little open-minded, and it's got nothing to really do with their intelligence, it's got nothing to do with their knowledge, it's got nothing to do with their skill. If they were a little open-minded, I would tell you what these guys would do. They would, by the time it comes to 90 rupees and they realize that they have made error in selecting the stock, they would just immediately sell off the stock at 90 rupees and take this 90 rupees and just put it into a simple fixed deposit. And the moment they put it into a simple fixed deposit for say 1.5 years, they would just get their 100 rupees back at 0% risk, because it's a fixed deposit, and they would get their 100 rupees back. Yeah, and it would take them only 1.5 years. But what do these guys do? What they can achieve in 1.5 years time with 0% risk, now they want to achieve in the next 10 years time with 100% risk, because they are putting their money into the stock market. Now, I just want to quickly ask you a question. And the question is, if 100 rupees, please pay attention to what I'm saying. If 100 rupees goes to 30 rupees, yeah, the loss that you have is only 70%. But now that you have 30 rupees in the stock market, for 30 rupees to go back to 100 rupees, which is the value which you would require only to just only to recover your money, it is not 70 rupees, but it is 333%, which means for your money, which is 30 rupees right now into the stock market, just to recover and get back to 100 rupees, now this money has to work 333% more just to recover your money. Now, all I am going to say to you is that most of you guys find it difficult to make 10% into the stock market. How are you ever going to make 333% in the stock market? And this is how people who lose money into the stock market end up becoming long-term investors, because for you to get 333% back, you are going to take a long time. What you have to understand is basic arithmetics, and the basic arithmetics is very simple. 100 rupees going to 50 rupees is 50% loss, but 50 rupees going back to 100 rupees is not 50% profit but 100%. Which means your money has to work a lot harder just in order to recover your money. So this is the way people who are short-term traders end up becoming long-term investors. So when somebody comes and tells me in the stock market, especially in my classes, that I'm a long-term investor, I exactly know where you guys are. You guys are long-term investors, not because you are making a lot of money and you're not selling it. Is because you have sold, your stock price has gone down so much that you simply cannot get your money back. So this is the story of the 95% people who always end up losing money, but they keep on convincing themselves that one day they are going to make money. So having said that, there are two learnings from this. Learning number one, when the market is going down, please do not average, because if you are going to average, and if, for example, this is your average price, you are going to take a lot of time for you to recover that money. And this is what is the story of people who are 95% people who lose money and end up becoming long term investors, and people who are 5% people who understand the business and keep on making money forever. So thanks guys, thank you for your time, for listening. Please sit down and think about what I said, and please do not average into the market, and please do not make all these mistakes which most of the people in the stock market are making money, are doing and losing money. So thanks guys. If you have any questions or doubts, please write down below in the comments. If you think this kind of information makes some sense to you and you would like to hear a little bit more about it, please go ahead and put a thumbs up so that we know that you appreciate what we are talking about. You could also go and subscribe to the channel so that you get more feed, a lot of information coming your way. So thanks and bye.